Hey, good morning, everyone. Happy October. It's a beautiful Friday in Carmel, Indiana, coming to you live from Gimbal World headquarters. If you haven't been here in a while, we'd love to see you. And you don't need an appointment. If you want to have an appointment, we'd love to do that too and go over your particular investments and goals. But if you want to just stop in, it'd be great to see you. So, I'm gonna throw the disclaimer on the board here. Okay. Hey, here's this is a great piece of wisdom that you can pass on to all of your friends over the weekend. But do you know the difference between a neck tattoo and a social media post? Yeah. Well, if you check out the disclaimer, you might see the punchline here, but a neck tattoo can be removed. So there you go. There you have it. Um, Nothing against neck tattoos. I don't see myself getting one or a face tattoo, but if that's what you're into, hey, that's cool. A lot easier to remove those in a social media post. And you know what drives me nuts? You know what makes me so daggone angry? That's a line from Earl Pitts. He was a make-believe character out of WLW Cincinnati. But you know what makes me sick? You know what makes me so doggone angry? Is with the social media posts and like kids, um, the amount of shaming that goes on if a kid just messes something up and puts it out there on social media, it's there, and the shaming on these kids is just it's sad, it's nuts. And so we've had little powwows with our family and just said, hey, look, there's nothing that we can't handle. We may not like it, whatever's said could even be true, or it might be something we've done, but we can handle it. And it's important to talk about that because um, when that type of social media shaming goes on, people need others to rally around them in a real way. So anyway, that's the scoop on social media posts. Nothing I say on this video can be removed as easily as a neck tattoo. So anyway, it's great to be with you guys this morning. It really is, and it's great to be living life. And so, um, if you've been paying attention to the stock market, or if you've been watching your statements, you will have noticed that we had a really good market working up until July, and then since August, we've been in a sell-off, and we saw that tipping point starting to take place in early August, and then things have been selling, and there's been more and more pressure um, coming on the markets, and a lot of this is driven by interest rates and like non-farm payroll information came out today, and it's hot stuff. I mean, employment has been looking better and better and better, and so that puts pressure on the Fed to make decisions on whether they're going to increase rates or decrease rates. And the market right now is saying we could see more rate hikes. And like we've been talking about for several months, is there's just more competition for your dollars. There's more competition for the stock market these days. When CD rates are right around 5%, money market rates, it's not uncommon to see around 5%. And we'll take a look at some of these things in greater detail. So I'll shift my screens and we'll do a market check, a market pulse with everybody, and then we'll shift over to a couple other financial planning topics that I'd like to share with you. But let's see here. Give me a sec. All right. So we're taking a look at the NASDAQ first up on my market checklist. And guys, as you know, all of these squiggly lines on here have a purpose, and the purpose is they are recording fear in the marketplace, greed at times in the marketplace, optimism, pessimism, and they're recording price and volume. Price is reflected up top here. And so when you see these vertical lines, mine are, well, the way I would describe that color is kind of pink or fuchsia, I don't know. And then blue. Blue are the positive days. The pink is, those are the negative or down days. And this vertical, if you can see, I'll draw a little, so like a vertical line like this, that basically just tells you what did the price do during that day. So let's take a look at it. On that day, see, that would have been September 20th. The market moved 1.5%. It had a high of 13,727 and a low of 13,467. So a lot of movement that day. That's what I would call, or Keith would call, a long line. And typically I don't like to see long lines. Long lines tell me that there's a lot of vague convictions in price. We like to see tight lines. Let me show you some tight lines. Like if you look over here, let's see, I'll draw. See these tight lines? There's not a whole lot of movement up or down. And so buyers and sellers are arguing over pennies. They're basically saying, hey, we think the market is priced just about right. And that's the type of market we like to see. We like to see arguing over those pennies. And the big swings, nobody really likes to see those. So this is the NASDAQ, and it's really interesting to me because if we look to the left of the chart, if you could glance your eyes over to the left of the chart, you're going to see a number here where I'm circling 13,181. Well, what's interesting about that? It's about where we are today. You see when I click how there's a line, it's kind of an orange line that'll shoot across. See that? That's really where we are today. And so, guys, unfortunately, when we go back and I'm looking at your statements, that's what I like to do. I like to go back and take a look at your statements. We are back to around that August level, or we just haven't really made a whole lot of progress, since this time last year even. And I realize this sounds all doom and gloom what I'm talking about, but I want to get into um, the optimism that we are seeing as well. But right now, the market is telling us that it's been weak. And so what's king? Is it the stock market? No. What's king right now is cash. And when I say cash, anything that could be converted over to real money quickly. Uh, Money market is a great example of a tool that can be converted over to real money quickly. And like I mentioned, money markets are paying close to 5%. So not a bad return. Late 90s, maybe the early 2000s before we saw that type of money market return. So anyway, just know that we're in a choppy time. The prices have come back to August, September levels of last year. And that's true really across the board. I'll switch over to the S&P 500. The S&P 500, as you can see, the price is right here. For some of you astute Gimbal financial clients and viewers and friends, you know that this black line represents the 200-day moving average. Now, one of the benefits is it's still rising. A rising 200-day moving average is a great thing. A declining 200-day moving average, not so great. But we are testing it, okay? The last few trading sessions have come and stopped and closed. The prices have closed right above the 200-day moving average, and that's okay with me. If it were to go below, that would cause some concern. It did go below the 50-day, as you can see this. That happened right here on 9/15. It happened earlier in August. And then, of course, in July was that peak that we were talking about. If we look all the way left to the chart again, we'll see here we are mid-August of last year. We're right at those prices. And I'm going to imagine this. Imagine we're looking through a scope of the stock market. And let's go ahead and zoom out our view a little bit. And this is a weekly chart. Some of you have seen this. Keith made a really cool point here. See these green lines? These are bulls, and we've had some nice little bulls come in here, but we haven't hit the peak of 21 yet. We started rising, things were looking good, but we still haven't gotten above the 2021 levels, and so kind of interesting, isn't it? Let's take a look and see. How about we just take a glance and see what yields are doing. This is the competition to the stock market right now. Our friend Mark likes to say this is the canary in the coal mine. And the canary in the coal mine is you're getting some interest on your safer money, like a CD or a money market or a treasury. This is a 13-week treasury bill. 13 weeks, pretty short time frame. And right now it's paying 5.3%. If we zoom out to a 10-year, 10 years paying 4.8. And if we could zoom out, if it's possible to get a 20-year, man, my goodness, these are paying right around 5. So these are just, if this was a stock chart, oh boy, I would love it. My goodness, I mean, what a trend! What a trend this is! Woo! Look at that. But it's hard to get excited about it because it's a bond, and the bond yields have just been spectacular. So that's what's happening with the safe money, is it's putting pressure on the stock market as the Feds talk about increasing rates a quarter or not decreasing. These types of bond yields just are pretty tough to beat right now. So cash is king. And then lastly, let's take a look at the volatility index. As some of you know, this is the VIX. You might hear this on stock market shows, or if you like to listen to Bloomberg radio, or or you're tuning in here. The VIX just tells us about the volatility in the marketplace, the ups and downs. And as you can see, the VIX has been on a rise here lately. One of our friends believes it'll come around here around this 25, 26 level. I don't know. We don't know. But we typically like to see this under 20 if we zoom out on a weekly. And if we take a look at, the under 20, this is normally when markets are pretty good. But there's been some increased concerns here lately, and again, that's all Fed related. So that's the latest on the stock market. In the past, I've also liked to share a couple other indicators that we use. We like to look at the amount of stocks that are participating in the stock market, the amount of stocks that are above their 200-day moving average, and that has been dropping. There's just not as many stocks that are above the 200-day like there were earlier in the year. And then we also like to take a look at the American Association of Individual Investors. And I'm a part of that. I vote every week on where I think the market's going, and then they send me some feedback as to what other advisors are considering and looking at. And I've noticed that the bears have been picking up. And so the bearish attitude has been picking up amongst advisors. And that indicator is really interesting because it's a contrarian indicator. And like when it shows that the amount of advisors out there are bearish, are increasing in bearish attitudes, that's a contrarian attitude, and that typically means the market's about ready to get good. Not all the time, but that is historically what it shows. And so, as we march into fourth quarter, I'm actually optimistic about it. I'm looking for opportunities and staying patient. Cash is king, staying patient, but I'm optimistic about opportunities for a few reasons. This is typically one of the stronger times in the stock market. Not every time, but the fourth quarter is typically a good time because companies are really pushing towards good success towards the end of the year. And company earnings estimate revisions normally start getting ramped up with better profits, better sales as they make deals happen towards the end of the year. And so I'm optimistic for that reason. I'm also optimistic because this is the third year of the presidential election cycle, and typically that is a good cycle for us. Again, I'm optimistic because historically, when we have a year where the S&P 500 has done well in the first half of the year and given some back in the third quarter, it tends to be a good year or a good end of year for the fourth quarter. Now, none of this has to happen this year. This is just historical information. And so what do we do with it? Well, we know that it's possible. And so we don't get complacent. We keep our heads up. We keep looking for opportunities. We keep looking at the market. We're looking at prices. We're looking at volume. We're looking to see are the small companies making any headway, or energy companies? Who's making headway right now? Where would we want to participate in? And so we're looking for those types of movements to come off of the different indexes. And so that's what's going on with the stock market. I definitely appreciate your feedback, and I want to hear from you. I want to hear from you if you have an idea too. I always love that. I met with a couple this week, and we were talking about college planning. Maybe people are talking with me about that just because that's kind of that's the age group I'm in. We have four boys, and the question is, what are you going to do for college? What's college going to look? And there are so many amazing options out there. I heard of a really neat option this week out of Rochester, New York. There's a guy who started Paychecks, and he started a 2-year business degree program where you just hammer in for 2 years and you walk out with a business degree. Now, you're not going to get a liberal arts education. You're not going to study arts as experience, you're not going to be covering the Baroque period, if I even said that right. You're not going to get that well-rounded experience, or 4 years of going to camp, summer camp at college. You're not going to get that experience, but you are going to walk out with a business degree. And this guy from Paychex, he's bringing in speakers and other CEOs to come talk with these kids, these students, about real life experiences. And that type of stuff is a disruption in the marketplace, a positive disruption in the marketplace, and just greatly encourages me. There's these little schools that are all over the country that are starting to pop up. And then on the traditional school front, how will people pay for it? Well, the Indiana College 529, it's okay. And if you want to talk more specifically about it, we can. But the Indiana College 529, folks, if you want to invest in something like that, your money needs to go in before the calendar flips. And so I normally recommend making that check sometime soon. Don't wait until the last week of December to do that. Just go and take care of it soon. And if you're an Indiana resident, they upped the ante this year. You can put in $7,500 and receive a 20% state tax credit. And so that's a nice kickback to fight against your state taxes. If you live in a different state, I doubt you have that good of a deal on the credit. Some states will have deductions on their plans where you might get a state tax deduction. Um, Deductions just aren't as good as credits. Credits are like real dollars, and so it's pretty cool. You put in $7,500 and you get $1,500 credit. Not too bad. And that's per family, per household. So if you've got 10 kids, you can't do that for each kid. That's for your family per household. And then sticking on the 529, Keith had talked about this uh maybe in August, I can't remember. But one of the pushbacks that we hear about 529s are, hey, I don't know if my kid or grandkid will go to college. Don't you have to use the 529 to fund college? And so that's a limit challenge. And they've changed some rules around with that. But one of the rules that will be implemented in 2024 is pretty interesting. And if a person has a 529 and it's in their name, so it's in Junior's name, all right, and he gets a full ride, or she doesn't use the money, she doesn't go to college, she starts some new tech company out of your garage instead and doesn't use the money. Well, back in the day, you would basically have to cash it out and pay a penalty on the growth and all this stuff. Well, today, if that person keeps it for 15 years, they can move it over to a Roth IRA, and there's limits to it. I think it's like $35,000, but there are some new options out there for people who wouldn't use that money for higher education. So it's pretty good, guys. If you're thinking, hey, I don't know what Billy's 9, we don't know if he'll use it or not. Well, there's some pretty attractive alternatives now that you can pivot and make some changes with those resources. So something worth considering, worth talking about. Um, Boy, the Shreves, we had a heck of a week this week, guys. We bought a newly used, no, not newly, kind of newly used car. And I wanted to share this with you because cars are freaking expensive. My goodness. And so they're expensive to maintain today. They're expensive to buy today. And some of you know that I love F-150 pickup trucks. I don't know why. It's the number one vehicle sold in America. They sell like 700,000 of these things a year. And I don't even know. We work with people who have money, but who can afford these things? I mean, if you just get like a cloth seats package one, it's 45 grand. If you get like they don't have a George Bush edition, but I just picture if George Bush had a F-150, it would have leather seats and all this stuff. If you get the George Bush edition, I think they call it the King Ranch. If you get that one, I don't know, maybe 90 grand. I mean, I don't know how you do this kind of stuff, but I share with you that the Shreves, we we bought a newly used car, and I tell you guys, it's great. And I want to encourage you, if you're stuck with a vehicle, you don't have to go out and break your wallet. You can find something within your budget that'll work for your family and work for you. Maybe it's time to downsize a vehicle. Maybe you're just looking to get some better mileage. But if these types of big decisions are on your radar, just know that we've seen them. We've either seen them through our own lives or we've seen them through your life. And so we have some empathy, and we understand. We want to be there with you. But just know that those decisions, you can use our brains, you can use our opinions. We've got the financial tools to help you make a really good choice. So anyway, I'm going to wrap it up with that. I'm really grateful for all of you. And some of you are going on fall break this week. And if you don't have any kids at home, I'd encourage you to go on fall break anyway. Okay, well, have a good week, and I'll look forward to seeing you guys same time, same place next week. Bye bye.